welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lavisha Darad, and joining my colleague Yatin Mota. Well, Yatin, it looks like it was another day of loss, and the wall of tariff worry is not going anytime sooner. Tomorrow is the tariff deadline, and 25% tariffs on India, that continues to remain at this point of time. But yes, Nifty down for the second straight day below that 24,600 mark. Barring the PSU banks that saw some breather after the RBI kept repo rates unchanged, all of these sectors nosedived into the negative territory. So among the rate sensitives, bank was the outperformer, while Realty and auto, both of these stocks continue to sulk. Now, RBI has kept its stance neutral, maintained GDP growth projections and cut the inflation projections for FY26, but it has kept the first quarter of FY27 at 4.9%, which is quite at a higher end itself. But yes, I think, Yatin, while RBI has held the interest rates, the tariff noise continues. Earlier in April, we were expecting better deals, and then with other nations also, he inked some of the deals and we were kept on hold. Several rounds of negotiations took place. But now, constant tariff threats, that is what has made the street nervous.
Absolutely, and not only threats from Trump, but also earnings which have been slightly subdued. If you look at the FMCG results which came in, barring Marico, we had the numbers of Britannia disappointed, Divi's Lab disappointed, Bharat Forge disappointed with numbers. So I think it's equal mix of global uncertainty coupled with moderate to weak earnings in India. Probably because of that, markets are feeling nervous, and probably the reason why the advance decline ratio today was almost 1:4. So one stock advancing and 4 declining. Clearly, the mid cap and small cap indices are underperforming. Sensex down 166 points, Nifty down 75 points. But if you look at the mid and small cap index, clearly under pressure, almost 1% lower for both of them.
That's right. Now let's take a look at the large cap gainers and losers on the Nifty 50. Asian Paints towering with about 2% gains. We did see that the Berger Paints, management did say that they are expecting to see good demand recovery by the second quarter itself. So as a result, we could see some, good rub-off effect coming on Asian Paints itself. HDFC Life, after 6 consecutive days of losing streak, finally up with about 1% gains itself. Trent also did well ahead of its Q1 results today itself and gained about nearly 1% or so. Bharat Electronics with about 0.8% gains, and Adani Ports also with about 0.6% gains given the good results, and of course brokerages also continue to bullish on the counter. However, on the way down we can see Wipro, some of the tech stocks continue to see beating. Wipro, Tech Mahindra, all of these stocks, Infosys, seeing a cut of about 1 to 2% itself. Sun Pharma, pharma stocks continue to remain in the blues. Sun Pharma, Dr. Reddy's, both of them down by 1% and 2% each. And then we can see the likes of IndusInd Bank after yesterday's good pop on the CEO's appointment. Today a little bit of a profit booking with about 2% downtick. Geo Financial, Bajaj Finance, the other names on the top Nifty 50 losers list. But yes, mid cap and small caps, they continue to remain on the losing end. Mid caps down about 1% and small caps also feeling the heat. Yatin, what are you gathering from this particular space?
So, if you look at the overall markets, clearly weak and mixed. If you look at the small cap and mid cap index, as I mentioned earlier, were sulking in trade. Now, if you look at stocks like Godfrey Phillips, post the numbers still moving around 10% today. Sarda Energy, second day of gains coming in. In fact, if you look at Sarda Energy, that stock is nearly up 30% in a 1 week time frame or a 5-day period. So, that stock is doing well. Now, if you look at the overall taste of the market, obviously it remains earnings specific. And if you talk about Wari Energies, that stock also moved 5% after hopes that it will get included in the MSCI index. What was not doing well, Bosch post the earnings and a probable caution statement when it comes to merging the unlisted arm of Bosch Global. That stock saw a 6% correction. Balkrishna Industries was 6% lower, and so did CCL Products and Redington decline. Given the fact that the earnings continue to be weak, and both of these stocks post the earnings have been slightly weaker on the mid cap side.
So stock-specific action continues as we are into the earnings season. But yes, let's talk about some of the stocks that did grab limelight today. Britannia, we'll talk about this first, given its tepid June quarter performance. We can see that the stock did not react well and succumb to the selling pressure with about 4% decline, given their June quarter results was weaker than what the street was expecting. If you look at net profit, that came in at about 520 crore rupees, whereas the street was working with about 570 crore rupees. Top line also saw single-digit growth, while EBITDA was a miss and margins came in at a multi-quarter low of about 16.4%. So basically, continued inflation in the key raw materials, higher employee benefit expenses, they took a toll on companies' operating margins. And apart from the rising input costs, demand weakness continues to remain from the urban consumers, and that's what weighed on the overall performance as well. Now, brokerages, they've also looked at the results quite conservatively, because if you look at Morgan Stanley, they gave out an equal weight rating on the counter and a target price of about 55.11 rupees per share. They noted that the margins were sharply down in the June quarter, but expect that going ahead, managing their own margins would be quite difficult amidst an increased competition. If you look at Nomura, they were also cautious on the counter because they believe that the volume growth was quite weaker than what they were expecting, and they've also given out a neutral rating on the counter itself. So brokerages also, on an average, remain quite cautious on the counter. Yatin, earlier we saw decent growth that came in from HUL or even from Marico for that matter, but in comparison, Britannia has fared quite weaker compared to its peers.
Yes, weaker indeed, and not only the volume growth, the margins were also weaker. So I think the markets saw the volume growth weaker and the margins weaker, resulting in the stock falling by nearly 4% in trade, underperforming the other FMCG companies, as you rightly mentioned. The likes of Marico, the likes of HUL, they've done reasonably well in terms of volume growth despite challenging conditions. However, Britannia continues to carry high cost inventory and probably some turbulence in near term as far as margins are concerned.
That's right. Now, given that we were talking about a losing end of the stock, let's shift focus to one of the top Nifty gainers, that is your Adani Ports. That did well in today's trading session because of its good June quarter performance, which came in above what the street was estimating. If you look at the numbers, net profit up about 6.5%, revenue saw double-digit growth, and we even saw Gautam Adani stepping down from a key managerial personnel of the company. He has been redesignated as the non-executive chairman of Adani Ports as of now. But despite the ongoing tensions in the Middle East, the management remains quite optimistic on its operations of its Haifa port, which is in Israel. And that is why you can see majority of the brokerages also gave a thumbs up to the results. If you look at CLSA, they've given outperform rating on the counter, and they said that the company's margins fared well because of a price hike and a better cargo mix. Now, Jefferies also gave out a buy call on the counter, and they shared a target price of about 18-15 rupees per share. They were impressed with the company's EBITDA that came in above estimates, and the management's reiteration of strong absolute EBITDA growth guidance further enhanced their stance itself. So, brokerage's commentary was quite positive, and as a result, that is why we could see that the stock was rewarded in today's trading session. Yet then, despite an uncertain time in the global map, the management is quite confident of its EBITDA growth guidance of double digits, and that's what impressed the street also.
Yes, and I think earnings that ways were robust. But when it comes to port companies or logistics companies, the question again is that GDP growth, will it slow down? Will the EXIM trade, which is the import-export trade, slow down? Because we have seen trade disruptions already impacting a lot of corporates. Being a port company, clearly the trade war clearly impacts the overall earnings picture. Let's see how the company delivers in the remaining quarters. But yes, a strong commentary from the house of Adani's.
That's right. Now that you're mentioning about the strong commentary, let me also talk about Bharat Forge, because there the management was quite conservative, and that was on expected lines itself. But the company did come out with its June quarter results, and that was on weak lines. If you look at the numbers, profit was down about 13% Y-on-Y, revenue slipped by about 5%, and operationally too, EBITDA was down about 9.2%, and margins contracted by about 20 basis points. Now, what further sulked the sentiment was the management's weak guidance, like I was talking about. Now, they said that the current fiscal year would be quite a challenging period for the company, and the company also remains quite cautious on the US export business for the remainder of the fiscal year. Now, they attributed this caution because of the recent tariff announcements and the regulatory changes in the emission norms in the North America. So yes, so this comes on in expected lines also, and for the defense business, they expect that to secure new orders in the ongoing fiscal. Because they'll be seeing the review of European steel manufacturing footprint, which is on track, and some concrete steps are also likely to be taken by the end of the year. But yes, Yatin, given that nearly 40% of Bharat Forge revenues are dependent on US, the stock also saw a hammering
Correct.
of about 14% itself in a month amid all of this tariff noise.
Absolutely, Bharat Forge gets impacted the most. However, the silver lining is, Lavisha, that their defense business is expected to do well. According to the investor presentation, the overall defense order book for Bharat Forge is now about 10,000 crores. So I think probably this is one segment on which the growth could get balanced, given the fact that there is still uncertainty with respect to the US business that they do. So yes, when it comes to Bharat Forge, the commentary has been mixed. However, domestic cues or the domestic business remains strong for this particular company. But moving from Bharat Forge to Bharati, and this is one stock we need to watch out for. Very stable quarters for Bharati Airtel this time. And the reason why I'm telling this is because the ARPUs came in at 250 rupees, which was up nearly 2% sequentially. If you look at the India mobile revenue, that was moving around 22 to 30%, and high free cash flow was seen during the quarter, which probably got appreciated by the markets. If you look at the net additions when it comes to subscribers, both for the fiber business as well as for the 4G, 5G business, it has been quite strong for the first quarter. And if you look at CLSA, they have an outperformer call on Bharati Airtel with a target of 2035. So from here also, brokerages believe that there could be a substantial amount of upside which can come in for the stock. However, Bharti Hexacom delivered a muted quarter. Obviously, it was expected that the quarter would be slightly muted, but the stock got hammered in trade. In fact, CLSA downgraded Bharti Hexacom on higher valuations, and they believe that the ARPU, which were only up 2% sequentially, with the volumes and the kind of play which was expected on the valuation front, didn't turn out that well, and hence they are downgrading it to underperformer call. Target price has been revised to 1525. So when it comes to Bharti Group, investors as well as the overall brokerage community remains constructive on Bharti Airtel.
That's right. All right. That's all the stocks we have for today. But yes, more earnings reaction will continue. Tomorrow is the August 7 tariff deadline. So you'll watch out if there's more comments that is coming in from the US president on the tariffs. And like usual, earnings reaction will continue to sway the market action. But until then, it's a wrap from Yatin and me. Thank you for watching, and we'll be back with markets tomorrow.